It's been a crazy start to 2025. We've seen a lot of nosedives and growth in the tech sector, illustrating the true sentiment of the market itself. Now, investors are concerned about inflation. They're concerned about tariffs. They're concerned about a lot of things that are kind of spooking the market. And a lot of the evaluations have been completely just kind of wrecked in 2025. This is the time when you return to basics. This is the time when you start looking at value investing, when you start pulling back a little bit further to avoid a lot of the market volatility that we're seeing, even if you just kind of hold steady. So in today's video, we're going to be looking at the SCHD and why exactly it is a no-brainer to stock up on while we see a pretty good market pullback. Now, we know with the volatility of stocks, the Schwab US Dividend Equity ETF, which is the SCHD, is definitely worth consideration. Me personally, I do hold it as 35%, I believe, in my portfolio as it sits today. Really bullish on it. I'm diversified, very inexpensive when you look at a valued portfolio, 3.5% dividend yield. And when you look at years that the market has been down, the SCHD has actually done incredibly well. So looking at some of the analysts, they are still marking it as a moderate buy, which we're going to look at in just a minute. It is also a double-digit percent upsides over the next 12 months is exactly what they're kind of thinking is the next year we could see a really good upside to the SCHD. Now, when we think about appreciation, this is again another place. So 13% over the past year, 21% over the past 3 years, and 95% over the last 5 years, which is kind of crazy. Even going further back to 10 years stands at 189%. When it comes to consistent performance, this is absolutely it. So if you're unfamiliar with the SCHD, what exactly is it? So we know we have the S&P 500. We know we have the NASDAQ 100. The SCHD actually tracks the Dow Jones US Dividend 100 Index, which is the most popular and honestly one of the most popular for ETFs today, and has almost $70 billion under management, which is making it one of the absolute largest, if not the largest. It might actually be the largest. So investing in stocks, selecting, the fund strength relative to financial ratios. When you look at the SCHD, it only holds 100 stocks, and we are right around the corner from the 2025 reconstitution. So what's that mean is a lot of companies are going to be out. We bring new companies in to make sure they fit the guidelines that we're looking at. So the top 10 holdings for the SCHD account for 42.8% of the entire portfolio. And the reason it is a diversified fund, not very tech heavy. That's another thing that's kind of driving the last 2 years of growth was a lot of the Magnificent Seven had double-digit growth for a lot of those. And when we start looking at a lot of the names, you're looking at Coca-Cola, you're looking at Pfizer, Cisco, Verizon, looking at Chevron, a lot of very common names, which are kind of the blue chip US dividend funds or the US really dividend stocks that have been paying for an incredible amount of time. When you look at, in addition to paying dividends, actually a pretty decent growth rate out of these, the S&P 500 trades nearly 26% the monthly earnings, where the SCHD is 17, which again brings a little bit more into the value side of the SCHD. And also that meaning that the SCHD is about 1/3 cheaper than the S&P 500, inexpensive valuation, especially when there's a pullback to buy more of it. So it does offer really two things. Now, when we think of my 3 ETF portfolio, we have the growth side, we have the staple, which is our S&P 500, and then we also do have this SCHD. Now, when it comes to the SCHD, very strong choice for dividend investors because there is minimal overlap, because it doesn't hold a ton of technology. The fund currently yields 3.5% per year, which is significantly higher than the S&P 500 at that 1.3%. And it has also shown consistent dividend growth for the past 13 years. That is a pretty good track record when it comes to performance. Now, of course, it also offers some in one of the lowest expense ratios at a 0.06, meaning for every $10,000 you have invested, you are paying merely $6 on an annual basis. It's incredible with ETFs. That is the reason why I do not buy individual stocks. I only buy ETFs because most of them are super cheap. Now, when we think of the performance, this is again where it does kind of get interesting. When you look at the diversification, strong annualized return of 11.9%. So again, not as high as the tech stocks, but even when you see the pullbacks like we've seen in 2022, not as low. So the VOO has really returned about 15.11% on a 10-year return, 13.7, which of course, SCHD again, not being heavy into tech, hasn't produced quite the return that we're seeing over 10-year span, but it is still doing well. So is it a buy, a sell, or a hold? That is what I want to go ahead and break into and get into so we can break it down. So I'm going to hop over to tip ranks, show you exactly what we're looking at here. So looking at the SCHD and looking at the forecast and the price targets, you can see the analysts are at a moderate buy. So 56 are saying to buy with the consensus rating 99. 41 is showing hold with 2 sell. So honestly, the 2 people who are selling out, I don't know exactly why, but overall you can see it is a moderate buy, not a strong buy, but it's a good part, and maybe not to have all of your portfolio in, but it's a good, really a good ETF to have a chunk of your portfolio in. Now, looking at, they do a high, an average, and a low. You can see right now it's trading at $31, high of a 36, average at 31, which again, the growth factor this year is really questionable coming into March of 2025, knowing what is going on with tariffs, knowing what the government is doing, all of the house cleaning, everything else they were doing. We're going to have to see exactly what it looks like when it comes to the SCHD for the forecast and also the price targets. So in my opinion, guys, with a little bit of a pullback, seeing it come back from an all-time high, and we know we've seen a split. We know the reconstitution is going to happen, meaning that they are going to adjust exactly what their 100 holdings are to make sure they fit the criteria of the SCHD. And I really feel like this is a very strong buy as an income generator, as a dividend ETF. This is one that is, of course, incredibly popular. And when we start looking at it, guys, there's a pretty good upside when you start breaking it down. SCHD stocks with the highest potential. There's a couple of big names in there that are really, really big. And again, the average price target, if we're looking at 31.38, which is what they're kind of forecasting for March, going to have to see what essentially right here's March 2026. So the next 12 months, they're thinking maybe right on average, we might see a little bit higher depending on how these companies perform. But also remember, when we see the market take a dip or when we see a pullback, this is not going to have those super high highs. It's also not going to have those very low lows that we've seen before, meaning this is going to be more of the stability. It's going to eliminate some of the volatility we see in the portfolio, and that's exactly what you need. So, all right, guys, so that's going to do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.